Did you know that one family, starting from a cramped home in Frankfurt's Jewish quarter, rose to become one of the most influential financial dynasties in history? Welcome to a billions worth of ideas, the place where future billionaires come to get enlightened. Today, we're unlocking the story of the Rothschild family. No throne, no royal titles, no political office, yet they shaped the flow of money, information, and power across Europe. This family began with nothing more than a small coin shop, run by Mayor Amschel Rothschild, a man known for his sharp eye for value and his obsession with understanding how money really works. But what's incredible is how, within a single generation, the tiny shop transformed into a global financial network, connecting the major capitals of Europe. While kings fought wars, empires collapsed, and nations struggled with debt, the Rothschilds were quietly building systems, strategies, and structures that allowed them not only to survive those storms, but to rise above them. They didn't rely on inherited wealth. They relied on information, on strategy, on unity, on long-term thinking. What most people never learn is that the Rothschilds succeeded because they mastered the fundamentals of financial intelligence long before the world even had a name for it. They understood the value of information when the world still traveled on horseback. They understood the power of networks when Europe was fragmented and unstable. They understood the importance of trust, discipline, and reputation when most business was done on handshake deals. And they understood that wealth is not something you chase for today. It's something you build for generations. Their rise wasn't accidental. It was intentional. It wasn't mystical. It was methodical. It wasn't a story of luck. It was a story of strategy. Behind that strategy are 5 principles, 5 core foundations that historians and economists agree were responsible for their extraordinary rise. Principles that helped them build one of the first true international banking systems. Principles that helped them survive wars, financial crashes, and political revolutions. Principles that allowed them to create generational wealth with precision and discipline. And principles that you can learn from today. Because even though the world has changed, the core ideas that built their empire are timeless. Today, we're going to uncover those principles not to glorify the past, but to give you the tools to build your financial future with the same intelligence, awareness, and long-term vision. Principle number 1, information advantage. Who knows first wins. In the early 1800s, Europe was changing fast. Wars reshaped borders, governments rose and fell, and enormous sums of money moved across nations almost daily. In the middle of this chaos stood Mayer Amschel Rothschild, a simple coin dealer from Frankfurt who understood a truth most overlooked. Information is wealth. Whoever knows first wins first. Mayer didn't rely on luck. He built a system. He trained his 5 sons and sent each one to a major financial center, Frankfurt, London, Paris, Vienna, and Naples. This created the first international, family-owned banking and information network in Europe. At that time, information moved painfully slow. Messages took days or weeks. Governments received news late. Traders relied on rumors. The Rothschilds refused to accept this disadvantage. They built their own ultra-fast private communication system using private couriers, coded letters, trusted riders, and eventually carrier pigeons. Their network often delivered reports faster than official government mail. This meant the Rothschilds sometimes knew about major political or military events hours or even days before kings, diplomats, or rival bankers. And when information moves faster, so does power. The Napoleonic Wars showed this advantage clearly. Markets swung violently based on battles won or lost. While others waited for newspapers, Rothschild couriers gathered battlefield updates directly and moved them rapidly across Europe. This allowed the family to adjust investments early, move money out of danger, lend strategically, and prepare for market reactions before news became public. This wasn't luck. This wasn't manipulation. This was information advantage. They won because they knew first, acted first, and positioned themselves ahead of everyone else. By moving certainty in a world of uncertainty, they built trust. Governments began relying on the Rothschilds for fast transfers, accurate information, and reliable financial decisions. Speed built reputation, and reputation built an empire. The pattern is clear. Information created trust. Trust created opportunity. Opportunity created wealth. You don't need to be a banker in the 1800s to use this principle today. The battlefield has changed, but the game has not. Information still decides who wins in investing. Business, career, and personal finance. Those who research earlier learn faster and spot trends before the masses gain the same edge that lifted the Rothschilds from a small coin shop to a financial dynasty. Because in every era, one truth remains: information is power, but early information is wealth. And that's why who knows first wins. Principle number 2, diversification. Across countries, the Five Sons Arrow strategy. In the late 18th and early 19th centuries, Europe was a patchwork of rival nation-states, each with its own currency, laws, and political dangers. Banking was localized, and most financial houses operated within a single city or kingdom, leaving them vulnerable. Wars, blockades, revolutions, or sudden government changes could freeze assets overnight. Geographic concentration was one of the greatest hidden risks in early European finance, ignored by most families. Mayor Amschel Rothschild saw this clearly. He understood a simple but profound truth. If all your arrows are kept in one place, one fire can destroy them all. But if each arrow is sent in a different direction, survival turns into strength. This insight became the foundation of the Rothschild arrow strategy, one of the most advanced diversification strategies of its time. Instead of concentrating operations in Frankfurt, Mayer made a decision no other family dared. He sent each of his 5 sons to a different financial capital of Europe. Amschel Frankfurt, Nathan London, James Paris, Karl Naples, Salomon Vienna. This was not simple family expansion. It was a calculated plan that turned 5 individuals into 5 strategic pillars of a unified system. By spreading the family across 5 countries, Mayer created 5 markets, 5 income streams, 5 economic safety nets, and 5 centers of influence. The family was no longer dependent on a single economy. If one country fell into crisis, the others continued operating. Capital and opportunity still flowed through the remaining network. The brilliance of the arrow strategy was coordination. The sons did not operate independently. They functioned as one network, like 5 arrows pointing in different directions, but pulled back by the same bow. Rothschild communication and trust. Each brother mastered his local environment. Nathan dominated London's bond markets. James adapted to Parisian banking culture. Salomon built connections in Austrian political circles. Karl navigated southern Europe's trade routes, while Amschel maintained Frankfurt headquarters. They studied laws, monitored political moods, built relationships with governments and merchants, and sent every insight, opportunities, risks, intelligence through a private courier system, often faster than official channels. This coordination gave the Rothschilds an unmatched advantage. Capital moved instantly. Information arrived early. Risk was managed collectively, not individually. They did not rise through reckless gambles, but through disciplined, diversified decisions, spread across nations but unified by trust and foresight. This is diversification at its highest level, not just protecting wealth from collapse, but multiplying opportunity across borders. That is how the Rothschild arrow strategy turned 5 sons into a single financial force. Quietly, decisively, and with unmatched precision. Principle number 3, strong family partnership and trust system. During the 18th and 19th centuries, most powerful business families didn't fall because of competitors, they fell because of themselves. Brothers fought over money, cousins argued over power, children battled over inheritance. And when family unity collapsed, the business collapsed with it. The Rothschild family rose to become Europe's most powerful banking dynasty because they mastered something far more valuable than gold or government bonds: unity, loyalty, absolute trust. One family, one mission. Mayer Amschel Rothschild, the founder of the dynasty, understood a truth most families ignored. A divided family is a weak business. A united family is an unstoppable empire. When he trained his 5 sons Amschel, Salomon, Nathan, Carl, and James, he didn't just teach them finance. He taught them how to protect one another, act as one, and build a network no rival could break. To the outside world, they looked like 5 separate bankers in 5 cities: Frankfurt, London, Paris, Vienna, and Naples. But internally, it was one family business with 5 international branches fully connected, synchronized and loyal. That unity became their superpower, trust, their secret weapon. In the early 1800s, banking wasn't about vault size. It was about trust. There were no digital transfers, no instant confirmations. Everything depended on handwritten letters, couriers, and reputation. One rumor could destroy a bank. The Rothschild brothers trusted each other so completely that they operated as if they shared one mind and one wallet. They shared capital, information, risk, and reward. If Nathan in London needed funds overnight, the others sent it. If James in Paris sensed danger, every branch was warned. If one city faced instability, the others stepped in immediately. No rivalry, no jealousy, no delay, only disciplined cooperation. How unity created power. First, they moved information faster than governments. Their private courier network delivered financial and political intelligence, days ahead of rivals. Second, they survived crises together. While other banks collapsed, the Rothschilds acted like 5 pillars, supporting one structure. Third, they entered deals as one force. Governments didn't face one Rothschild, they faced the full weight of the family name. Their unity wasn't accidental. It was designed. Partnerships stayed within the family. Roles were clear. Wealth was structured to prevent conflict. Many families faded by the 3rd generation. The Rothschilds expanded. They weren't powerful because they were the smartest. Many were smart. They rose because they were united. They endured because they trusted one another. And that trust built an empire that survived wars, kings, and centuries. Principle number 4, mastery of government finance, solving big problems. In the late 18th and early 19th centuries, Europe's governments were under constant financial pressure. Wars, massive state debts, and infrastructure projects drained treasuries faster than taxes could refill them. Governments needed enormous sums of money, often urgently, yet most traditional banks were too small, too slow, or too limited by geography to help. Then came the Rothschilds. While other bankers focused on small loans and private trading, Mayer Amschel Rothschild and his sons understood a powerful truth. The bigger the problem, the bigger the opportunity. They didn't just lend money, they specialized in financing governments, sometimes entire nations, during moments of crisis. This became most evident during the Napoleonic Wars. Europe was in chaos. Armies needed constant funding. Coalitions had to be financed. Supply lines stretched across borders and currencies. Many governments faced default because no bank could reliably move large sums of money across countries fast enough. The Rothschilds could. Using their international family network, they were able to move massive amounts of capital across borders quickly, manage complex currency exchanges efficiently, fund urgent government expenses with precision and reliability. This was revolutionary for its time. Nathan Rothschild in London coordinated huge transfers for the British government, ensuring the army could continue fighting Napoleon. James in Paris financed allied governments. Salomon in Vienna, Carl in Naples, and Amschel in Frankfurt handled coordination, risk management, and real-time information flow across Europe. They anticipated political risks, monitored exchange rates, and understood how each government's policies affected capital movement. This wasn't luck. It was mastery of government finance, foresight, strategy, and flawless execution. Why did this create so much wealth? Because governments didn't just pay interest. They gave the Rothschilds trust, influence, and prestige. By solving the biggest financial problems of their era, they became the first call during national crises. They gained access to massive government bond deals. They operated at a scale far beyond ordinary banks. One famous example came after the Battle of Waterloo in 1815. Nathan Rothschild delivered critical funds to the British Army faster than the British government itself could. That speed helped stabilize national finances, something impossible without the Rothschild network. They weren't just moving money. They were moving trust, influence, and solutions. By mastering government finance, the Rothschilds became indispensable, partners to nations, turning financial service into strategic power. And the lesson still applies today. Those who solve problems others cannot will always create extraordinary value and extraordinary wealth. Principle number 5. Long-term vision and low publicity. Playing the 100-year game. The Rothschilds never chased instant fame or short-term profits. Unlike many wealthy families of their time, they deliberately avoided public extravagance. They did not compete for attention with grand palaces, flashy lifestyles, or newspaper headlines. Instead, they focused on building enduring financial power quietly, patiently, and strategically. Meyer Amschel Rothschild taught his sons to think in decades, not years. Their goal was not quick profit, but generational strength. Every investment and decision was designed to grow, stabilize, and compound over time, ensuring wealth could survive long after one generation passed. This philosophy rested on 3 core principles. First, patience over instant profit. The Rothschilds were willing to wait years, even decades, for returns. They understood that lasting wealth is not created through speed, but through discipline and timing. Second, stability over reckless growth. They avoided opportunities that could endanger long-term wealth, even if those deals promised fast and dramatic gains. Protecting the family fortune always came before chasing profit. Third, discretion and low publicity. By keeping operations quiet, they reduced political envy, social resentment, and unwanted attention from governments or rivals. Their influence grew behind the scenes, where power is most secure. While rival families flaunted wealth and collapsed within a generation, the Rothschilds expanded silently across Europe. They established banking houses in Frankfurt, London, Paris, Vienna, and Naples, each placed with precision and operating as part of one unified network. Each generation did not start over. They built upon the work of those before them. Wealth was not merely earned. It was preserved, coordinated, and compounded. Their low-profile approach was not modesty. It was a defensive strategy that protected them through wars, revolutions, and financial crises. Every major decision was measured by long-term impact. Family members were positioned deliberately: Nathan in London, James in Paris, Salomon in Vienna, Karl in Naples, and Amschel in Frankfurt, pieces of a single coordinated plan. The Rothschilds understood a timeless truth. Wealth is not just about making money. It is about protecting it, compounding it, and guiding it across generations. This was the essence of playing the 100-year game. Remember, think decades, not months. Move quietly but strategically. And always play the long game. If you learned something today, hit like, share, and subscribe for more financial wisdom. See you in the next video.